of the companies are micro versus macro and everything going on. I think like it's all mixed in the same thing, Sarah. And you and I were talking about this. You look at these press releases. I mean, look at Kohl's. Look at the way it's trading. To your point, had you had the press release this morning, you still may not have made money. So I think what we saw, TJX was a standout this week, and TJX was a standout because it was up a lot on a red day. I think the reason was because they focused on margin. So you and I, for the past however many years, have been talking about this idea that retailers chase growth for growth's sake. That was the problem. COVID paused that. And now all of a sudden, everyone's going back. And everyone chasing that revenue but giving up the margin is feeling pressure. TJX actually protected margin and was rewarded for it.
I think two of your favorite turnaround stories during COVID are both under a lot of pressure today. Under Armour, we know why. You just heard from Kevin Plank. And Bath & Body Works, both at the bottom of the S&P 500. Are you still a believer?
Yeah, so I think that if we look at a year, those two stocks will be phenomenal opportunities. I think right now, there's no bid for consumer discretionary. I think we need to get past this macro news. And I think catching falling knives, there's just no interest. But as we look forward, the question, both of those two businesses have gross margins higher than they were pre-pandemic. Both of those two businesses are healthier than when they started. That's different from some other companies you and I talk about that were COVID winners. And I think that's the distinction. We need to find companies that won during COVID as opposed to companies that won because of COVID. Because that revenue will be given back, that margin will be given back. The question is who actually changed their business and who's healthier. I think those two are prime examples.
All right, so you're sticking with them. Simeon Siegel, thank you. Got to move on because the fintech stocks are also big winners today after being significant underperformers during the broad market sell-off we've been seeing. Kate Rooney joining us. Kate, Block outperforming after its investor day yesterday. Anything specific that gave Wall Street more confidence, or is it just Bitcoin is up and so a lot of these stocks keep going up?
Yeah, well, Block in particular has been trading like Bitcoin proxy, so that's likely helping. But yesterday was Square's first investor day in 5 years. The CFO really tried to make the point that Square, or Block in this case, is profitable. She focused a lot on unit economics. I talked to her briefly. She pointed out that they're outgrowing, they're outperforming other fintechs. So that really was the focus. We also got some updated profit margin numbers. So they didn't give targets for 2022, which was a little bit of a disappointment for Wall Street. It's good to see what happened last year, but analysts really want to know what to expect in 2022. Mizuho backed into some of the numbers. They're estimating Cash App's long-term profit margins could be close to 40%. And we did get last year's, which were closer to 12%. So did give sort of a new picture here of how profitable the company is when there's a lot more focus on some of the bottom line numbers versus growth at this point. And then Bitcoin is still the big story. That is really what Jack Dorsey talked about. And like we mentioned at the top, Sarah, probably one of the reasons Block is outperforming today. Some Wall Street analysts don't love the Bitcoin story. They'd rather have Block focus on the more profitable payments company. But as far as Jack Dorsey is concerned, that really is the long-term vision here for the company.
Kate Rooney, Kate, thank you. We're getting some